Information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming. This is Sky News Real Estate. Smart investing.
Hello and welcome to Smart Investing. I'm Charles Tarbey, filling in for Chris Gray. And on tonight's show, what are the big things that trip up people when they are looking to buy a property or looking for a mortgage? And what can we do if you're struggling to find a place you can afford, which is a really big issue, particularly in certain markets around the countryside right now. Certainly there are areas that are better, but we're going to try and find out what my panellists think tonight of where is a good place to buy. Now, should you also be going to a bank to get a mortgage, or are you better off going through a website? And that's an interesting one, because tonight joining me on the show is Andrew Russell, and Andrew is the Executive General Manager for Financial Services at realestate.com and also News Corp. Expert Tom Panos is on with us tonight. Tom's my good mate, so it's great to see you here tonight,
you.
Tom.
Good to see you.
We're going to get a wrap-up from you as well. But Andrew, tell us a bit about your position with the company.
Well, you might have known that realestate.com.au entered the big home loan market just recently.
Yes, I had heard, and there's probably a few people who are thinking, OK, we're in competition with each other now in a serious manner. So,
well, we've built it integrated into our experience. So consumers who are coming on to realestate.com.au can either apply digitally over the phone and through hundreds of brokers around the country face to face. And I'm lucky enough to lead a very talented and committed team who are changing the way that we apply for home loans in this country.
It's a really interesting thing, because in the early 90s we talked about leveraging real estate transactions, and we had banks and solicitors that controlled that process, and real estate agents had very little to do with it. And so if you wanted to apply for a loan, you had to go to a lawyer who had an allocation from a bank, and if you didn't have an arrangement with either, your buyer, who might have been qualified to buy, couldn't even get a look in. So from my perspective, it was a very important point for us to try to change that around, because as a real estate agent, we have a lot of power in sending people to various places. So if a buyer came in to see me and I'd spend 2 hours with them and they wanted a certain property, they then started to talk to you about which conveyancer they should use or which bank they should use. And because at that point in time they were emotionally attached and involved, you were able to help them make that decision.
Yes.
So I think it's a very, very important part of the process. Now, how do buyers apply for a home online with your organisation?
Well, most people have gone on to realestate.com.au and you're searching for the property of your dreams, and we've built an integrated experience. So you've found a property that you like, and so what's the next question that pops into mind? Clearly is, can I afford this property? And a calculator will engage, and you have the opportunity to start engaging with the calculator, putting in some income details, some expense details, and working out what would your loan repayments could be.
Yeah.
One of the interesting things about it, which is one of the pain points that I had, I don't know if you've had that experience using calculators on many websites, that once you put all that information, your brain started to think, what are my expenses? Well, you can save it down on realestate.com.au and then come back at another time, and then all that information then gets pre-populated.
Well, most of the time they want your information first before they'll offer you anything, and that's what we saw in the earlier ones. And I think a lot of the websites are starting to recognise the consumer experience sometimes just needs to be, let me have a quick look and I might come back to you, but that wasn't quite the case. Now, Tom, you've had a lot of experience in this area, particularly with finance, home loans, auctions, people making sure.
Well, you won't believe it. It's a funny month to be talking about it, because this month I'm doing, I think I'll speak to 4,000 brokers around the country doing seminars for, I think it's called Better Business, the Advisor. So I clearly know, I mean, that space there, you know that the competition is the level has gone up. As we were talking about last week, there used to be a time where people just used to go sit in front of a bank manager begging for money. Now everyone's got to differentiate themselves to get the attention in a really noisy space. And I know that REA, and how does it work with REA? They use just one bank for the funds. Is that how it works?
Well, you can apply online,
Yeah.
primarily over the phone or through a mortgage broker.
Right.
We offer the suite of NAB products. We offer an REA product, but also we have access to over 20 lenders on a lending panel, that you can go and see the mortgage broker face to face at the time of your choice.
How quickly could somebody get approved within the structure with REA?
Well, it's a full application that's backed by NAB, so it's not a Mickey Mouse approval. So you've got to go through the required process, and that would take about half an hour.
It's not like the ones you see where you can nimble it, or where it is you can get your money in 5 minutes or something. This is a very serious process.
Well, it's a serious process, and there's a number of credit responsibilities, but it's for the consumer's best benefit to ensure that they're going through the process. We're understanding all their expenses so that we're putting them into a line that they can afford. But the beauty of the process that we have real estate is that you can use the online conditional approval at the time of your choice.
Excellent.
And what we're finding at the moment is that once the kids are to bed and sets after 9 o'clock at night, that's when our customers are applying for home loans.
Now, why your organisation as opposed to speaking to a bank, for example? I know the answers to this, but let's tell the people out there what you and I might think about why you wouldn't go to a bank first most of the time.
Well, it's about saving your time and saving your money. So from a time perspective, you can apply when it suits you through the channel of your choice. So that's the first thing, and you don't have to book an appointment to go and see the bank manager. Then once you get approved, you can link up that conditional approval and then continue on with your property search. So as you go on to realestate.com.au, you can see all the properties that you're conditional approved for.
That's massive.
And that's all in one place is a big differentiator.
Now, Tom, have you ever had anybody turn up to an auction, bid at an auction, be the successful bidder at an auction, and not have their money approved?
Yes. There've been, Charles, there's been a number of times that has happened, and there's been a number of times that people have been running in between signed contract and settlement, racing to try and get funds, and you'll know that that's not the time that is the best time to be trying to get a loan. You'd want to be doing it before you've actually signed a contract. Yeah. But what you're saying is with the calculator on REA that people are able to get a conditional okay, is it?
That's right. They can use the tools on the realestate.com.au, and one of those is the calculator, so you can work out what your repayments might be. But when you've got to that point that you want to apply for the home loan, all the information that you've saved down to your financial profile and that you've used in that calculator gets uploaded into the application. Then you'll have to put in some further detail as you go through. That gets electronically submitted into the credit engines of NAB, and then it'll come back giving you a conditional approval.
And I assume that if somebody isn't successful in buying a property, that information will stay and they can go back and reapply, or
that's right. So conditional approvals usually last for 3 months.
Right.
But the most important thing, as we were saying, is that once you know that you're approved, that gives you the confidence to be able to bid on the weekend, particularly in this market.
So I'm curious. So a lot of times a broker won't get involved in the process. Is it all done by a client themselves?
It's our whole proposition is what the consumer would like. So you can apply through the channel of your choice,
right?
But you also can go and see someone face to face, and we have over 100 brokers around the country under realestate.com.au home loans. They'll come out and see you at your home, and then we'll talk through your lending requirements.
All right, now let's talk about, you can go first, Tom. What tips do you give people to save for a deposit? Because I was at a presentation today where people were talking about 100% finance, and I'm going to touch on it in some of the shows in the future. It's legitimate. It's a way of bringing people in that can afford it but don't have a deposit. So let's give people some tips on how to save for a deposit.
Well, Charles, I had someone tell me on the weekend on a property that they were bidding on that $10,000 of their deposit, get ready for this, $10,000 of their deposit came from them buying or picking up things at next to nothing on Gumtree or eBay, right? and re-putting them back on the market, right? Having said that, the deposit was a lot more than 10 grand. So one thing is selling, but probably buying and selling stuff. But I would probably say, Charles, right now, realistically, at the end of the day, I think that if you're hustling to get into the market for your first property, which is always the hardest property to buy, once you've got equity, life gets a lot easier. I think you've just got to accept that the choices that you're going to have to make on discretionary spending are going to be pretty tight. I think you better accept that you're not going to be enjoying holidays in Europe. You're not going to be flying overseas too often if you're trying to get a deposit. That you should accept that the car should probably not be a BMW. That you should also accept that have a few more meals at home.
Yeah, you sort of, I guess everybody who saves for a home really does have to suffer a little bit. There was a lot of talk last year about what you should or shouldn't eat for breakfast, as opposed to how much it might cost. So,
what, avocado? Smashed avocado?
I didn't want to say it, but I'll let you say it. What about yourself, Andrew? What do you think? Some of the tips for saving?
I think that it's the biggest investment of your life. So if you want it that badly, you've got to set your property goals. You've got to understand what your borrowing capacity is, and then from that, what deposit do I need? And then putting together a very clear budget in terms of being able to meet that deposit. And some of that is quite a chunk of change. So you need to be very focused on looking at your budget, not only on a monthly basis, but challenging yourself on a daily basis. Do I need that taxi home, or can I have less filling on my sandwich at lunch?
Should I walk home?
But they're the sacrifices you've got to make.
A lot of people out there are probably thinking, hey, I struggled, I saved, I did everything, I've got my house, what are people complaining about? But everybody's circumstances are different. We're going to look at some of the charts now for the week, and the first one we're going to look at is the auction clearance. That's been a really interesting one to watch, and Tom's here is going to add to it, I'm sure. But if you look at the clearance rates, they've been dropping progressively over a period of time, and if you go from this time to last year, you looked at 65.9% with the clearance rates for Australia for the week just gone, and last year they were 78.6, so a really big difference between the two, although 65.9 isn't a bad place to be. The best marketplace actually, Tom, was Canberra, of all places. 70.8% was a clearance rate.
Canberra's been good.
Yeah.
Look, I've got to say that, potentially that number, we've got to remember that during the week, uncollectibles come in as well, and they're auctions that haven't been collected on the Saturday, and
of course,
there's a proportion of those that don't sell. There's no question about it. I auctioned 10 on Saturday. I did 4 out of 10. It's hard work. Even the ones that sold, we weren't, pulling out champagne bottles saying it's incredible money.
Not like it was.
Not like it was. I think that we've accepted that there has been a price correction in the strong Sydney-Melbourne
Sydney
market.
had a 66.9% clearance rate with 1,044 properties, and Melbourne came in with 1,523 properties, and that was a clearance rate of 67.3%, only slightly better. But the three best performing capital cities when you look at this time last year were Canberra, Perth and Adelaide, and we've been talking a lot about Adelaide and Perth. Now we'll also look at the stock on the market, and we've had a really great week with stock coming on the market. There's been a 3.36% increase this week over last week, and you'll see on the chart it's really been spiking very, very heavily, and that's what we want to see. But more importantly, when you look at the stock levels, they've changed from this time last year also, Andrew and Tom. You're probably noticing this on realestate.com, or the guys at REA would be noticing a big increase there, 8.14% increase over this time last year. So that's a really good sign. We'll look at the rental chart now too, and that's had an increase a few weeks in a row, 1.61%. But get this, 8.9%. Hobart jumped this time over last week, and Melbourne 2.91%. Now those two capital cities are the ones that are feeling the end of the cycle. And I'm really watching very closely as that starts to change. But that's a massive increase just for Hobart alone. I think that's just fantastic that we're seeing that. And the last chart we'll look at is the vacancy rate, and that's actually nice. It's slightly up from this time last week. But what I really like about the vacancy rate is watching the Perth market change. Melbourne came in at top again, 1.16% vacancy rate. Sydney came in at 2.34% vacancy rate. But gentlemen, the best capital city, Tom, that's had the best improvement over this long period of time, Perth. 6.53% vacancy. Now, we were talking about this going back a while, and it was like up 10%, so 6.53% for that. And the three capital cities combined with 3.34%, so still very, very low. But I love watching the way Perth is actually starting to do that decline. And also the price movement in Perth is not as dramatic a drop as you were seeing as they were last year. So a lot of things changing in those two marketplaces.
Yeah, well, I've got to say, I mean, they've had it very hard. They've had it very hard. And to be able to see those two numbers change on that index is very promising. So I think if you're a girl or guy that's a real estate agent in Perth, I'd say stop, because they're all saying, Charles, oh, you know what, we're going to come over to Sydney or Melbourne. It's too hard here. I reckon don't fly over now. I reckon there are good times coming ahead there in Perth, and it's been long overdue. And it's so interesting the way that real estate markets operate. I mean, they're so independent. You can no longer say to people, oh, how's the market going? I mean, the markets are so different in each city, even in regions. So I just think that they've got their own ecosystems now, real estate markets.
Yeah, I guess if you were thinking about buying, you would consider Perth, because it's hit absolute rock bottom, and prices in Perth are as low as they were 5 years ago. They've gone through, amazingly gone through this full cycle, and they're lower than what they were. And again, I look at Perth prices and recognise the fact that at one point in time they got very close to Sydney prices from a median point of view. Perth's gone down, Sydney's gone up. There's a massive distance between those two.
Correct.
Massive distance.
Yeah, I'm also following, Charles. I've noticed that clearance rate. I mean, the ones that I always look at clearance rates is you're talking about Sydney and Melbourne. The gap's getting Melbourne's eased a little bit. So I've noticed that Sydney and Melbourne clearance rates are starting to look very similar. But it's a busy time. We're going up to Easter now, and like real estate agents, this is pretty much their Grand Slam season now. This is where they're putting deals together.
Yeah, the autumn season auctions are picking up significantly. So, I mean, you guys are going to be... What you're going to find, I guess, in entering this marketplace is you're going to find people out there now that are going to take their time with the way in which they process things. But when they do get there, they're going to be genuine people that you'll want to do business with. Yeah. All right, well, we're going to take a short break, and we're going to come back with the rest of the program.
You're watching Sky News Real Estate Smart Investing. Welcome back to Sky News Real Estate Smart Investing.
Welcome back to Smart Investing, and joining me on the show tonight is Andrew Russell, the Executive General Manager for Financial Services at realestate.com, and of course News Corp real estate expert Tom Panos. So gents, Andrew, I'll ask you first, what are the big things that trip people up when they're out looking for a mortgage?
Well, there's just so much information, isn't there? And there's so much jargon. So if you're a new home buyer, or even an experienced home buyer, you want to make sure that you get as much information before you make that home loan decision. And that's one of those is ensuring that you know how much you can afford and how much that's going to change your lifestyle. One of the things that does trip people up, particularly as they're coming to the settlement process, is what is the process? So finding that information from your home loan specialist or from your lender, and then also, as importantly, know the funds that you actually need to complete that settlement, those extra fees and charges. And
that's a really interesting part too, but also the mortgage itself now, because a lot of the off-the-plan sales, as we've discussed, Tom, plenty of times, are now coming home to settle, and some of the valuations, so of course the banks are going to call for valuations, and that's going to be a real problem. Tom, you've purchased property over the years you were around. You were buying property same time as me when the interest rates were 18%. Maybe not buying, but hanging on to it. So what's your advice in that area?
My advice is that you should, in this market right now, you should definitely have a really strong indication on what you can and you can't borrow. And I also don't just get seduced into a product with a low rate. And the reason why is that sometimes if you actually look at the life term of a loan, the way some products are structured, it might look attractive as a low rate up front, but what you should be looking as, you know, most investors are not short-term investors, Andrew, and you'd know that sometimes the lowest rate and the best product are not the same thing.
Well, yeah, and interest rates have been low for some time now. So do you think, from your perspective, do you still think it's a good time for people to jump in right now?
Well, recently, realestate.com.au commissioned a survey, and the response said 37% of people were very positive about buying this year, relative to 20% saying they weren't. So it's nearly a factor of two. So I think that in the environment where we've got low interest rates and you know, good numbers on employment, the market looks continuing to be strong, I think.
I think so too. You know, we're watching what's happening in US. Canada is the place they're telling us to watch because of a very similar market. And their interest rates are starting to move. But if they change our interest rates downwards, which they've wanted to do because of the economy, it could have a devastating effect, because I think it forces people, or people want to jump back in, and that's the last thing we want. We want a stable market, and we're in a good one right now. So how can property investors and first home buyers, if you think about it, take advantage of the current interest rates? Tom, I'll ask you first.
How would they take advantage of the current interest rates? Well, what I would say is, right now is actually a really good time. I've seen a lot of people that have been sitting back between October, November. I'm seeing people now, you can actually buy a property for around 5, 7, 10% less in some areas than previously. So I would say take advantage of the fact that there's a bit of stock. Your graphs earlier showed the increase of stock levels, you know, and that's a really good thing.
And we're going to get you to show a couple of properties in a second. Andrew, what about yourself? Do you think?
I think why the interest rates are low, they're not going to be here forever, so pay down your mortgages as much as you can and get you positively geared on
RBA were pushing to do that because they were concerned that people had fixed loans and they weren't reducing their debt. So if they come out of those fixed loans and the market's not quite where it should be, they could be in trouble. Now, we've got a couple of properties to look at. Property this week, property number 1, is 40 Douglas Street in St Ives. And Tom, if you can go through that with the
yes, I can. As it comes up there on the screen, it is presented from an agent, Gary Ward. Go see Gary Ward, 40 Douglas Street, St Ives. Google the address. REA will probably be the site will come up first. Quality of construction, full brick home. It's got a price guide there, Charles, of $4 million. The method of sale is expressions of interest, and it's a beautiful property.
I've been a bit naughty this week because I'm hosting. I've got 2 Century 21 properties up there. So while Chris is away, I'm having a bit of a play with it.
He's very biased. So not only does he control the show, he controls the properties that we talk about on the show. But
it's a great-looking property. I mean, have a look at how beautifully presented it is.
Yeah, well, look, at $4 million, St Ives, it's a great suburb. But I'm just reading off the brochure and the information provided here by Gary Ward, and it sounds like it's a superb home, electronically controlled kitchen cabinets, automatic toilets. Automatic toilets. Now, they've even actually automatic toilets. Now, that's an interesting one, gentlemen.
Yeah, well,
$6,000 each.
You see that everywhere you go in Japan. That's Century 21 Taramara. That office there is Peter Brack, the principal of the office. The next property we're going to look at is 90A, and I don't know how to pronounce this. If I got this right, Caraba Road, Neutral Bay, and this is Faye Petro from Century 21 Neutral Bay. So, Tom, over to you again.
Okay, so Charles, this property's got a price guide of $2 million. 3-level townhouse, as it comes up there on the screen. It's got great views of the Harbour Bridge. There's only 3 in the complex. It's 14 months old, quality finishes, low levies, and it's very, very hard to find such a property in Neutral Bay, really close to the ferries and the buses. So this ticks all the boxes. You can see that on, it's on realestate.com.au, century21.com.au, and it's got a price guide of $2 million. So go in and have a look at it. I've got to tell you, these properties, 6-7 months ago, you'd be paying more for them.
Absolutely, yeah. But they're very unique properties, and that's the thing about it. And I think that's what I like about both of them, particularly the one in Neutral Bay. You often see a lot of older properties in Neutral Bay.
Absolutely. So what they could do is put an offer and acceptance, get the money from Real Estate Home Loans, and be in there by Easter.
You done? Yep. You want to buy it yourself, Tom? You can put the option. We don't have much more time left for our show. Just a quick one, Tom. Would you list a property, advise people to list a property with an agent outside of their area to buy it?
Look, there's so many agents in the marketplace. I would list with an agent that's in the area. Right. And the reason I would do it is they know the market inside out. They've got the product knowledge. They can sit there and speak to a buyer from a position of strength. It's their hero suburb, and I think
they know what they're doing.
They know what they're talking about. They know the school catchment areas. They know every suburb's got these unique principles about it. Right. And that's what I would do.
Thank you, Tom. Tom Panos, really good, always good to see you, mate. And Andrew Russell, thank you very much for joining us this evening. I look forward to catching up with Chris Gray, hopefully next week on the show. Thank you very much for joining us.
Information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming.